Welcome back, guys, to another roundtable. Adam once again, Victor,
Hi, everyone.
Rusmin,
Hello.
Kenny.
Hello.
You're the fifth person joining us, and today we're going to talk about SPH and all about SPH and the recent announcement. So just a very quick, I think it has been hitting the news very recently because of that infamous press conference. But we're not going to focus too much on our Dear General because I think everyone else has already been talking a lot about it. So we're going to focus on SPH as a business and as investors and what you should do if you're an SPH shareholder right now. All right, so just a quick recap of what's happened with SPH is that the media business has been failing for a long time. Right. Yeah, I think it's a new digital age. And, recently they announced that they would basically hive off this media business unit and put it as a not-for-profit under a not-for-profit entity, all right, away from the listed SPH company. All right, but the thing is, they also announced that SPH would inject $110 million to this new entity, all right, in the form of like cash injection, $80 million and $30 million in SPH shares and SPH REIT units. All right. So the question is, why do shareholders have to pay $110 million to dispose of a business unit? Would they take umbrage at that?
I think you are paid to clear your garbage.
But I think the reason what the chairman actually gave, during the press conference was that they wanted to provide some working capital for SPH Media once they become independent to let them sustain for at least 3 to 4 years down the road, right, before they seek for external funding, right? So it's kind of like, want to make sure that they survive, they don't go down, because SPH Media is important to all of us. It's a national asset, let's put it that way. But now the question now is why shareholders have to pay for it?
Can't they get the money from somewhere else? Why? Usually when you dispose of something, you get paid for it, right? But in this case, you're paying to get rid of something. It's almost like I don't know, it's like a divorce and you to pay off your ex-spouse.
or it's like moving house and then you want unwanted furniture, you have to pay somebody to
disposal
get
fee.
Yes.
I think the management is probably on dilemma, because SPH is the national newspaper. So usually, especially in the US, when they clear off the media business, they sell to another competitor. But there's no other competitor in Singapore for them to.
And you can't sell to a foreign company or something like that, right?
So that's one dilemma.
And there's also, I think they need to seek the minister approval if they are intending to sell asset, because this is the only news company in Singapore, and it's highly sensitive asset that you're talking about. So I think the best way to put it, of course, now is park it under the company limited by guarantee, right, and then let it run by its own. It still has a corporate status. It's just that there's no shareholders, so this company will no longer pay dividends, and they will just reinvest back the earnings back into the company. So that will the objective. I think that everybody want them to have maintain the quality of the journalism here in Singapore.
So if they are there's no shareholder, means the only way they can raise capital is through debt, right? The debt market.
Either debt or maybe somebody donate to them. And I think government is one of the funding sources that they could actually look after, right? So if actually I'm a shareholder of SPH, I'm not currently, I don't own shares in SPH, maybe one share only because I attend an AGM. I will be very sad because the management actually has been investing a lot of money in the digital media asset, right, over the last 5 years, and they actually invested every year 20 million on average. So that amounted to about 100 million. So shareholders is kind of like expecting that they could turn around the digital arm, right? But now they have announced that they're going to, spin it off, and then they not just usually, I can't say spin off because spin off usually you get money back, right? But this time around, the shareholder have on top of the money that they invested, they have to pay more for this asset. So I think a lot of existing investors will not be very happy.
So they would take umbrage. Okay. So I think the question would be, the SPH's media business hasn't been doing well for many years. They've been trying to turn it around, like Rusmin has been saying. But why is it doing so poorly? Because right now everything is moving to the digital age and everything. But there are examples of very successful newspapers overseas, like the New York Times, the Wall Street Journal. They have successfully transitioned to a subscription digital model. So if they can do it, how come SPH can't do it for their own business?
I think firstly is we must all understand is that the landscape of the media industry have changed, right? People don't advertise on newspaper and all this. I think the competition for them, right, is not only within the domestic, it is in the world. If you talk about the New York Times and all this, I think it's not only US people is subscribing to them. They also oversee people. I think Rusmin got the stats on that, right?
Yeah, so I think if you look at the market that we're talking about, New York Times, they have subscribers. The total number of digital subscribers alone is about 7 million in the US, okay, which is huge. I think if you in comparison, SPH, the digital so-called digital subscribers is only about less than 500,000, right? And of course, if you compare another very successful brand, Wall Street Journal, which we also subscriber of that, has about 2.6 million in terms of number of subscribers.
Wall Street Journal got very high quality articles.
Yes. Yeah, so of course this exclude the Barron's that they have. They also have another publication magazine, right? So the market in Singapore, I think generally is way too small for SPH Media, the digital arm, to be sustainable by itself. I think Minister Koh Boon Hua actually came out and talked about it. Even Singapore, if they reach a penetration rate of 80%, okay, so the number of households in Singapore is about 1.2 million. So each household usually will subscribe to one and then they will share. Right, so even if they reach 80% penetration rate, there will be about 1 million subscriber, and that alone itself is not enough to keep the media arm sustainable. Right, so I think the minister actually is looking to go beyond outside of Singapore to reach out the target audience. Yeah,
I think the main reason for that is because in the past used to be a lot of advertising and revenue that came in from newspapers. The subscription revenue is actually the smaller proportion. But now it's changed. Now people are paying for subscriptions, and advertising has moved on to like we know like Google and Facebook and all this stuff. So that advertising revenue is just gone. And you just can't sustain it based on subscriptions alone.
I think moving forward it's going to be a bonus actually advertising. So the bulk of it should come from the the readers that actually pay the recurring revenue to you. So that part has to be sustainable. If it's not sustainable, then the advertising itself I think is not sufficient, because we all know ads is highly cyclical, right? Every time there's a crisis, they will pull back. So which is what SPH Media is going through. They actually suffer huge losses because of the the COVID-19.
So basically this morning I went to check, right? I want to put an ad, like a 4x2 ad on Straits Time. How much will it cost? So it's actually
what were you planning to advertise, man?
The fifth person, our round tables. That's just what I'm gonna do. And then I checked. Just to display my ad on a Monday, it cost me about $11,000.
Wow.
Whereas if you go on Facebook and YouTube, if I'm an advertiser, definitely that's the platform that I will go to, because you can interact with your audience and it's targeted marketing, and you can start with a small sum, let's say $100. And of course, I have a statistic here. If you were to advertise on Facebook, cost per click is only 97 cents. So then they
on
can
average,
it's an average, right?
on average, So then you can display it right in front of the audience that are most likely to click on it, and then you can access right into that page. Let's say the e-commerce page that
it land directly on your website. It's like the real call to action and everything that you want there.
The 11,000 SPH one is not targeted. It's a general audience, and you may not have return on investment on that.
And your outreach is probably like for 500,000, less than 500,000 audience, and this one you can go to millions of users, and of course you can set your geographic target, the geography that you want to target.
It's a lot more. I mean, it's a lot more flexible, and you can calibrate things on the internet that you can't do with a traditional newspaper. It's just like whack the ad and that's it, And so one day, on the next day, you throw the newspaper away, it's gone. But on online, it's just like you can always like adjust and scale and all that.
That's why Facebook and Google is actually very disruptive when it comes to advertising. So a lot of businesses are moving there, right?
So another thing that I also want to bring up is, of course, the availability of news online. So nowadays, if you don't subscribe to Straits Times, you can easily go to Channel News Asia, and most people just want to read up on the big stories, and once they're done, they just...
I just go to Reddit, man.
So this is fine, because all the newspaper in the world are facing this issue, right? I mean, you can read information news from everywhere else, but if they can produce the kind of articles that, or content or insights that, or analysis, that we want to read, I think people are more than happy to subscribe. Okay, so I think I've been reading SPH, Business Times, Straits Times. I think the quality of the journalisms are there, but
it's not as high as New York Times and Wall Street Journal.
The quantity or quality cannot match those that like in the FT or
Yeah.
Wall Street Journal.
So if they want to go out of Singapore, the quality of the journalism has to
Have
go
to
up,
go
right?
up. Yeah, and they need to provide a lot of insightful analysis content, not just resharing the news what's out there, which you can get it from Yahoo, all of that for free, right? And sometimes when I read it, I saw some of the articles that they have on the newspaper. It's actually from Bloomberg. I read it in Bloomberg, and now it reappears on my subscription that I'm paying for it. So as a reader, I'll feel like, why am I reading article from somewhere else, right?
It's quite like a vicious cycle, right? I mean, if you can't pay enough for high quality journalism, no one's going to subscribe to it, and no one's going to subscribe to it. You can't pay journalists to do these things for you.
I'm still subscribed to it because we are local, right? So we need to keep in tune on that. But foreigners who subscribe to Bloomberg, and then they are thinking to us, they won't even consider Straits Times.
Yeah, I think the market. I think to summarize, basically SPH, the media business, the market here is just too small. I think only Singaporeans would be interested in Singaporean news.
Definitely,
in a way, right?
Yes. Yeah.
So the market for that is too small. 1.2 million households, and because advertising is being just shifted entirely, it's gone. So the subscription enough is just not enough for the media business for a Singaporean one. So but in the case of New York Times and all that, they cater to a global market. Everyone wants to read what's happening over there in the New York Times. They're high quality articles that you will pay to read, and it give you a lot of good insights.
Yeah,
and
then
well,
I think because with New York Times and Washington Post and all these, they have that niche audience that they attract. Like for Wall Street Journal, it's basically all the business people, and for Washington Post, you have all on politics. So people who are interested in politics, they know that they are the voice. South China Morning Post also is another one that people want to get to know about what's happening in China, more like an independent voice in that sense. They will go there. So if Singapore were to go in that area, they have to like broaden maybe to cover Southeast Asia, so that
but that's what Channel News Asia is doing already, right? In a sense.
Probably dig deeper, more.
And in fact, SCMP actually reversed into their business model. Previously, they were free to read. They rely on advertising. Then they realized that, hey, paid subscription is the way to go. So they closed the door. So now you have to go through the paywall in order to read the article, right? So they also realized that, hey, the subscription business is so important. And now I'm also a subscriber of SCMP.
Yeah, but I think the why they are able to get international audience also, like what we were discussing just now, right, with Adam, right? He was saying that if I want to subscribe to New York Times in the past, right, it does not make sense, right?
Yeah, because I actually think the digital age is been a boom for really good newspapers. Because in the past I wouldn't subscribe to the New York Times because it was only available in print. I'm not going to wait for it to fly over and I get it.
The news are going to be old,
right? So only the Americans would subscribe to the New York Times. But in the age of the internet, I can get it immediately, same as everyone else. And if I want high quality journalism, because the New York Times doesn't just cover the US, it covers the world, right? Those big news items and everything, I can get it, and the whole world can subscribe to that. But then what this means is that Straits Times is competing with people like that. It's a globalization of news, and you got to compete with that.
So it's not
It's tough.
it's a globalization kind of competition, not just in Singapore.
All right. I think so. I think it's pretty clear it's going to be a tough business. That's probably why they want to just take it away from the listed company. So I think the question now for investors, SPH shareholders especially, is that okay, you're going to get off this, you're going to chop off this arm, bam, it's gone. Will the new SPH be a better performing company? Because the media business has been a drag for many years. You take that away, you're going to pay 110 million, that sucks. But, will the new business be a better performing company?
I think for a long time, a lot of investors have already been seeing, SPH, Singapore Press Holding, will become Singapore Property Holdings, right? So everybody knows that. So now officially, I think we can say that Singapore Property Holding, they will come with a Singapore Property Holdings after the spin-off, right? So the asset that there will be left over is going to be their investment in SPH REIT. They have stakes in IFAS, Q10, CHOP, and then a few others like nursing homes and then student accommodations. So those are the assets that it become like an investment arm, right? Rather than a media, no more media, right? So they're just an investment holding company. So they need to keep on continuing to support the SPH REITs, inject the property. So they are going around looking for property opportunities, and then they try to buy them, improve them maybe, and their capability arm is not development part is not that strong as compared to the giants.
They are
like
still
CapitaLand.
new in the industry.
They are very new, so they are neither here and there. They are more like a investor trying to buy property and then inject it into SPH.
So they're
But
trying to
they
like
do
be-
not, they do not have a specific segment that they go because they are going all over the place. They go to aged care. They go to now they partner with
Student
Capital
account.
DC to
Yeah.
do the data centers
Okay.
and all this. Right?
Yeah, so they're still very green and
Yeah.
new in the development arm itself. So I think, of course, the SPH REIT or the Paragon properties which they own has been around for many years. They have the experience when it comes to managing those property. Yeah, so those are the assets that is going to be left over. And yeah, so for any investors who are interested to look at SPH after the divestment of the SPH media, then this is the investment holding that you're looking at.
But of course, majority of their profits are now coming from the rental income.
yes.
Rental income. So to say that they are developer now, they are moving towards that direction. But still, we should look at them like a landlord, right? Landlord business.
Yes, yeah.
So something like Capital Land in a way, like a mini Capital Land, but not as experienced.
Yeah,
Something like that?
yeah, you can put it that way, all right? And well, to be honest, if I'm looking at SPH, I'd rather look at SPH REIT because if I'm someone who's looking for income, I'd rather look at a REITs that pay 100%, right? Because moving forward, SPH may not be paying 100%. I mean, they have not. I don't know whether they will change that policy. Yeah.
And Capital Land is actually restructuring their business as well. If you checked out our previous roundtable on Capital Land, it's also no longer like a developer per se once it goes through.
But in the case of Capital Land, I think the shareholders get paid for the spin-off. Right? But in the case of SPH,
We have to pay.
You are paid to
you are
clear your
shareholder
public
of SPH.
one share, one share. It's okay.
Yeah. So I mean, that
sorry.
still is like you still got to vote it through, right?
Yeah.
You
Yes.
see what happens at the EGM and all that. But yeah, so the new SPH will become a property company, rental income and all that. Do you think it will be more stable? Without and it's going to be more profitable. Revenue is going to grow and all that.
Yeah, definitely more stable. If you look at the property arm, right, they have been growing for the past 5 years at 7% compound annual growth rate.
Okay.
So it's a rather stable business. So we can expect more stability. We also can expect from here moving onwards, if they were to pay dividend, it's much more stable.
Okay.
Right? Because now the dividend have been decreasing, and recently because of the COVID and the media business not doing well, they cut even more.
Okay.
Right?
So if it's going to become like a property company, it's going to be a different company, right?
Yeah.
And let's go talk about valuation now. So, I mean, if it's going to be a different kind of company, the market is going to value it differently, right? So what would the value of SPH be, and after that, how would you value it?
Okay, so if you were to look at the rental income, right, that they're getting, I minus off the interest expense and the tax, right, you're roughly getting about 144 million. That's my estimate, okay? So if you assume that they pay out 100% as dividend, right, which is impossible, so we just assume this case. So that will be about 9 cent dividends. So, and I think investor will definitely expect a 5% yield from this company. If you can't get a 5% yield from this company, you should just go to other place, the SPH REITs or something, right?
Okay.
So if you talk about 5% dividend yield, right, the value should be around 180.
Okay.
Okay, right now they're about 1660. But that's assuming 100% payout.
Okay.
Right.
So, okay.
But if I were to assume 50% payout, that would be 4.5 cents. So 5% yield is about 90 cents. So that makes probably much more sense as compared to the 100% payout.
Okay.
Right?
Yeah.
And do take note that I'm valuing this based on the landlord business. But moving forward, they're going to go towards more property development. So developers have developers discount on their price to book value.
Yeah, so you look at the industry benchmark, I think a lot of property development companies in Singapore, CDL, CapitaLand used to be, right? And now, of course, after restructuring, their price has gone up. They were mostly trading at a huge discount to the NAV, at least a quarter discount or 1/3 discount, right? So that if market treat them as a property developer company, they may trade at a discount to the NAV. So post pro forma NAV net asset value based on their projection, it's gonna be end up with $2.08. Okay, before that was $2.24. So after the divest off the SPH media, it's gonna be at 2.08. So if you give a discount of 1/3, it's gonna give you about $1.50 or lower.
Okay.
Yeah, something lower than that.
So it looks like it's gonna come down.
Yep.
Based on
I mean, theoretically speaking, based
right.
on what we know and how the market treat the company
like that.
development company, right? So, I mean, the market may trade at for investment holding company. Let's say they put it SPH that way, right? They may trade at a premium only if the management are solid management. Like you have a Warren Buffett, for example. So Warren Buffett, Berkshire Hathaway, sometimes they trade at 1.2 times, 1.3 times, right? Crisis, they will drop to 0.8, 0.9, right? But SPH, I don't know whether they are considered
So
good
it's
management.
the faith of the faith or the trust that you have on the management that will see whether they will trade above the premium. That's what you're saying, right?
Yeah.
Okay.
So I think chances are higher that they will be traded at the discount rather than at the premium.
All right.
That's
So
how they
based
do it.
on NAV, it's
About
likely
$2
they will trade at a discount because it's comparing it to other SGX REITs. I mean, not REITs, property
SPH.
stocks like that as well.
Yes, yeah.
And based on yield,
Yeah.
you're looking at that amount that you're looking at.
Yeah, it's like 90 cents to 180,
Yeah,
But
and
180 is impossible.
Yeah, and this is not taking into account of the bulk of the earnings actually still come from the SPH rate, right?
Yep.
So that itself, the retail market, you all know that have been disrupted because of the COVID-19. So the traffic footfall has dropped, retail tenant sales have actually dropped. So there's uncertainty in that area because tourists are not coming in yet. Okay, so people will give a discount on that. Until things become clearer, the world managed to clamp down the COVID-19.
So I don't think the discount you're going to get will be at 1/3. Definitely, there's a high probability that you're going to be, based on what you just shared, right?
Yeah.
It might be a higher discount.
Yeah. So
Okay.
a lot depends on market, right? Assumption on how they're going to treat this business moving forward.
Okay.
Yeah.
Yeah. So I think these are the things that you would have to take note of if you're a SPH shareholder. It's going to be a different kind of company, and it's going to be valued at that kind of that sort of company.
Yep.
Those who are shareholders of SPH right now, they probably be wondering, what should I do with my shares, right? Should I hold and see what happens? Should I just jump and what if you were an SPH shareholder? What would you do?
I will not want to stay in a sinking ship.
Sinking ship.
Yeah.
Even after the media business is like taken away, what's left you
But
think is not great?
I feel it's going to take some time before they stabilize. So there's a lot of uncertainty.
Yeah, that's
in
true.
that. So I hate uncertainty.
Okay.
Yeah,
So I want to
for
don't
those-
be in and
yeah.
wait until it become more certain.
Yeah, for those who invested in SPH, you probably missed out the article that written by Victor many years ago,
Yeah.
talking about SPH. Right?
Yeah, actually, I think we should pull that out. I think Victor wrote an
I
article.
wrote it in 2017. Say that's a sinking ship.
In fact, 2017 is even not the earliest year, right?
Yeah.
So I mean, the business has been disrupted for quite some time, right?
Actually, I dropped a hint in I don't know if you can read in between the lines. I dropped a hint that you should not own SPH at the point of time.
Yeah, but anyway, people probably who have forgotten even
Yeah.
if they read it, right?
Yeah.
So that article will probably bring it up why you should not touch
Yeah.
SPH, right? So for me, those of you who invested, I would just if I'm in the shoe, if I'm the one that invested, I'll probably just cut loss and then move on.
There are better investments.
There are
out
better
there.
investment out there, right? But of
Okay.
course, if you have no other better investment out there, then
Or you just love
maybe
SPH.
you-
I like the stock.
yeah, I like the stock. Yeah, because this used to be a blue chip company that was
It
doing
was.
very well back then. It was
Yeah.
a monopoly business, right? It was a crown jewel, pay very good dividends.
Yeah.
But that was then, right? It was like 15, 20 years ago. Yeah.
It's
10
over.
years-
It's
It's
over.
over.
You have to
yeah.
move with the times, industry change.
Yeah.
It's no more
changes
press
and all that.
holding, it's property holdings.
Okay.
They're really
Yeah.
taking the newspaper money to invest in property, trying to replace the dividends the cash flow that they are losing from their media
Yeah.
business. But then it's actually, I mean, they're losing so much faster than they're able to replace it with the
Yeah.
properties. So I think it's best for people to move find better dividend stock, because people generally invest in SPH because of the dividends. If
Yep.
the dividends are
Yep.
declining, there's no point staying in place,
Yeah.
and you can recoup as much capital as you can, rather than waiting for the chance that, or the probability that the price might drop, and then it's very hard to get out.
So a lot of uncertainty in this stock right now.
Yeah.
Yeah. Okay. So I think that's a pretty good wrap up of SPH. I mean, recently with all the news about the the general and all that. So yeah, I think that was a good wrap up that we kind of like focused on the business itself, what's going to happen, and what would you do if you were SPH shareholder yourself. So I think that's good. That's a good summary. Okay. So once again, thank you so much, guys. Again, it's Adam here.
Thank you.
Victor, Roseman, Kenny,
Thank you.
you're the
Thank
fifth
you.
person joining us. Thank you so much. If you like this video, please hit the like button. Tell us that you like the content that we're sharing. Of course, subscribe to our channel because we have many more roundtables coming up as well.
Also share your comment about SPH.
Yeah.
Let
If
us
any
know.
questions or comments, we're happy to. If you look at our comment section, we're very into
ball.
on the ball about replying to your comments on that because we want to have an interaction with you guys. So once again, thank you so much for joining us, and we'll see you around again.